Hello traders out there in trader land. This is the weekend edition video, D7 here, and this is a long weekend. We go through January 18th, 2021 due to Martin Luther King Day. The markets on Friday ended the day mostly bearish, with financials doing the worst, down 1.65%. But nothing did, as far as commodities concerned. Silver took on the chin. Anyway, down 3.2%. Gold down 1%. VIX up nearly 5%. Not good. Bitcoin around 36.5 at the time of this video. And before we get into it, gang, at the end of this video, I'm going to be talking about a specific stock, Twitter. They axed President Trump, and I want to show you what has happened to their stock, and I want to analyze that collectively at the end of this video. Let's get started. If you look here, this is the spider. The spider on Friday had a big drop on massive volume, okay? Massive volume. We have a hammer. We're below the EMA. It's an exponential moving average. That's the gold one here. We're staying above the blue one. You can see the blue one coming up here. We're still above that. We close below the red trend line. Bad news. But this major blue one coming up, we did find support. The question is, are we going to bounce here? You almost can see a little M. Up, down, up, down. Almost a double top. Not quite. It's not quite a double top. But this is a lot of problem here. See this huge volume? Look at this, kind of like, I'll go into teaching mode. Here's my teaching hat. Here in the Midwest, when it's winter, lakes freeze over. Let's say we're out on the lake. We have a bowling ball with us. We put the bowling ball up. We drop it. It hits the ice, but it doesn't break through the ice. But what it will do is send fractures and cracks all through the ice, making it weaker than what it was. Now, that said, look at the S&P 500. We were up here. The bowling ball came slamming down, hitting the ice, but it didn't break through. But is this weak now? Maybe. See this huge volume? That volume makes that bowling ball that much heavier. Now, the question is, this lower shadow, how much of this lower shadow is actually bullish activity going up? Maybe a lot of this volume is on the bull side with this rallying back up. We won't know until Tuesday when the markets open back up if we're going to rally back north or if we're going to break through this support. Very key that we watch this. Now, what I like to do, guys, is always look at the higher time frame. This is the weekly chart. We're up. We stagger step here. We go up. We're above all major moving averages, all trend lines. This seems well. But look at the leg here. You know, look at the size of this leg before we had a pullback, a little one. This leg, and then we had a pullback. Look at the size of this leg. We're due for a pullback. Maybe consolidation, maybe a pullback. We need to stay above the moving averages and these trend lines. Critically important on this weekly chart. Now, the monthly chart, guys. The monthly is, we're in the middle of the month. We shouldn't put too much credence on this, but we're up. Look at the size of this up leg. And then we have a doji at the time of this video. That, you know, we're in the middle of the month. So this could look sizably different than what it looks now. But nonetheless, it looks like it could be ready to a reverse, but we need to stay above this trend line. If so, we need to maybe base sideways for a while. That's what I'm looking at on all major time frames on the SPY, the spider ETF on the S&P 500, which is very, very important for us to look at. I want to show you something on the let's see. Hold up 1 second. Give me a millisecond. I have something that I want to share with you. The best way for us to help our users, when I say us, expert traders, there's no faster and better, more efficient way for us to help you than to mentor you. The biggest fallacy out there of traders is that books, seminars, trading videos will fix their trading problems. That is wrong. It's not about more information. I have to stand up for this. It's about the assimilation of that information. All the books in the world won't teach you how to ride a bike. If you want the shortcut to competent trading, just click the link below and let's have a chat. Let me see. This is the small caps, the Russell's 2000 on the weekly. Last week, boom, we broke through it. And by the way, Romulus, thank you for stepping in for me and doing the videos. Much appreciated. He is a Grok star, just like Mark the Meerkat. We are full of, a hedge fund guy. Meerkat, he's the best day trader I know out there, period. And just a genius swing trader. And when it comes to hedge fund and large portfolio sizes with and how those are managed, Romulus is the man. Hedge fund manager, 14 years experience doing that. Craziness. All right. Last week, big breakthrough on small caps Russell's 2000. We're continuing higher. That tells me we are doing okay. Now, I say all that to go to the financials. Okay, remember I just said this on the small caps. We're going to go to the financials. Financials, I'm going to build a different case here. This is a weekly chart, XLF. Back here, we have a support line at January 18th. Okay, January 2018. 2018 January. We come over here. This is January 2020. We come over here. This is January 2021. So every January, we're finding these drops on financials. Look what has happened on the weekly chart. We had this extraordinary run to the upside. High base, that was a play. So you see the triangle breakout, boom, there's a play. We go high base, there's a play. We go up, up, up. We come up and hit that trend line, and all the smart money starts selling right into it, and it drops right back down. We have an inverted hammer. No. It's not an inverted hammer. It's actually called something else. What is this candlestick reversal pattern? Down in the comments for extra bonus points, tell us what that reversal pattern is. And that's what we have right now. So if, in fact, the weekly does reverse and we start heading downward, the next few months could be really bearish. Really bearish, okay? Really, really bearish. And it's something we have to be watching for. So let me go back looking at the monthly on this. This is financials monthly. If you look at the monthly, this line goes all the way back to May 2007, okay? 2007. That line comes across right here, January 2020. Now we are January 2021. This line is big. This is a monthly chart, so this thing's still moving up and down, okay? The question is, are we going to close above like we are now? Are we going to be at $30.85 or higher on XLF for the monthly at the end of this month? If so, that's really bullish. Look for more upside. However, here's the problem. If we close lower, we get below 30.70 area and we close there, we will have hit our head at resistance, just like we did here. Look for a drop to commence, okay? Very important. Pause the video, watch this 2 or 3 times, write down those numbers, mark my words on this, okay? I have this next month, February, I will have 23 years technical analysis experience trading in the live markets. A long time, well over 2 decades. So let's head over to the dailies again, and I want to look at NASDAQ. The NASDAQ has a problem. We were below the EMA We're below the 20-day SMA. The tech stocks are weak. It broke one trend line. It's got another. The big blue one is a huge one. This is very, very important that we stay above that, but we're showing significant weakness on the daily front, okay? On the daily front on tech stocks. Quickly look. I want to see. I'm looking at the weekly. It's in a big rising wedge. The monthly is just doing a whole lot of nothing. All right, go here. Financials we looked at. Okay, let's go to U.S. dollar. U.S. dollar, guys, is, if you look here on the monthly, this monthly is down, 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 down. It almost looks like it's hammering out like it's wanting to go up. That's a monthly. If we go over here to the weekly, look at the weekly. This is on the U.S. dollar. The U.S. dollar has a falling wedge, and look how we found support when we bounced up, and we have a bullish divergence on the MACD centered oscillator. Guys, really, really bullish on the U.S. dollar. This thing could be at a low. We could be ready to go higher if we come over here and look at the daily chart, okay? This is the daily chart. Daily chart, big falling wedge. Look at this. What pattern do we have here? Look at point 1, point 2, point 3, and we broke the what? What is this pattern, and what did we break? Extra bonus points if you can tell me that. Can you guys tell I got my instructors, my mentor hat on? I'm just teaching you, and I'm stressing you a little bit in a good way to have you thinking about what you're seeing. And look how we're starting to go above the moving averages right now, especially the 20-day moving average here. So that's really, really important. Now, the U.S. dollar, if it starts heading higher, that will put pressure on equities. You see them to not do so well and start to drop, especially on the different commodities such as precious metals. Guys, silver. If you look here at the monthly chart on silver, this is bad news. We hit our head at resistance, we dropped. We hit our head at resistance, and we're dropping on the monthly. If you go over here to the weekly, look at this. On the weekly chart on silver, we go up, 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 support, bounce, and we're at major support again. If we break lower than this support, that's going to be big time trouble for silver. Remember that I'm saying this right now. If you go over here to the daily chart, we go down, 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 a bear pullback. We have a shooting star. We drop. We're below all major moving averages. Silver and gold is not what you want to be in. Here's gold. This is gold daily chart. Same thing. We go down, 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 a bearish pennant, big drop. There's another short. So short cities on the dailies on both of these. If you go to the gold weekly, we broke that trend line. Silver hasn't broke it yet. We did break it on gold. Gold could be leading the charge to the downside. Watch out for gold and silver. That is not good at all. If you look here at the monthly chart on gold, we're at major support right now. If we break that support, woe to gold, woe to silver. But at the same time, you're seeing cryptocurrency make all-time record highs yet again. And if we go here to the daily chart, to the VIX is in a big triangle. It popped up on the daily chart. Do you see this? Popped up, came back down. If it breaks this, if we get over 26 on the daily chart, that's going to be bad news. But it's a different number on the weekly chart. If you look at the weekly chart, it needs to get over 28. So 26 will be bad. 28 is worse because it will have broke that trend line. And then the monthly, it needs to get over, oh boy, it really needs to get over 32. And those numbers are bad news for, if we go up to those areas, the markets will be bleeding. That will be no good. No good. Bitcoin, if it breaks that trend line, it's in a lot of trouble. It's had this big run on the weekly. The monthly is up, up, up. I'm waiting for it to do a pullback so I can look for an opportunity to buy more cryptocurrency. Okay, now I said I was going to show you and end on the video talking about Twitter. That's what I want to do now. Let's look at Twitter. Okay. Now, if you haven't been watching the news, I'll catch you up to date. Twitter's a big technology stock, And it's an information type platform where people can tweet or leave little messages for everybody that follows them to look at and to read. Okay. Well, President Trump was on there, and he had, I think last I remembered, 88 million followers. So a lot of followers. He could send out one tweet and reach a ton of people. Well, on this day, this is January 8th. It's a Friday, but it was late Friday. The markets had already closed. And on this date right here, Jack Dorsey, who is the CEO and the co-founder of Twitter, ultimately made the decision to ban President Trump from Twitter forever. When he did that, you had Saturday, Sunday for people to stew on it, for the markets to write all about it, or the news medias to write all about it. And the very next day, Monday, it opens up significantly lower. A huge drop to the downside on massive volume. And what's interesting here is it went down and touched that trend line. This trend line was drawn with this low in June 2020 to this low November 2020. And we you can see we went down, touched it, and came back up, right? And then you'll see that each day of this week we got lower and lower and lower and lower and lower. And here's the problem. It broke a major trend line. This major trend line it's a big one. It broke it. It should have bounced there. It did not. This is in significant trouble. It needs to heal itself and fast. Now, the only hope that it has is this. If you look here at the MACD, you'll see that we're getting ready to cross over. The histograms are getting smaller and smaller on the negative side, so it's ready to tick higher. So that will cross over. Look for this to drift higher. But if it doesn't, we don't get a flip of the histogram or a crossover here and a continuation of that, this thing could bleed out and fast, because what you're seeing here on this stock is significant drop, big drop on big volume. This blue line coming across is the average volume. Every day this past week, we had above average volume to the downside. It just doesn't pay for a company, especially a publicly traded company, to go political. People should keep their nose out of politics, I think, because bad things happen. It's not worth doing that to your investors. So everybody that's holding these big tech stocks such as Amazon, Twitter, Facebook, who else? I'm sure I'm missing a couple. You may not want to be holding those right now. And it's just too risky at this moment, because there's a lot of downdraft happening that's keeping this push down. If you go here to the tech stocks, here's Apple. Look how the trouble it's been in. It's dropping. Amazon, if you look here, dropping. You go to Facebook, dropping. Facebook just last week was so brutally. It's just bad. If you look here, I'm going to measure it. So this was for 1 week. 1 week to where we're at right. Well, I'll just go down to the low. It lost over 8%. They lost 8%. Google under a lot of pressure here. You can see that. Anybody else? So let's go back to Twitter, and let me show you its drop. This is just bad. We'll start where we ended on Friday, go down to where we ended this past Friday, and it looks like we're down almost 12.4%. Man, that's huge in 1 week. The market usually goes up 11% per year. 11% per year is the average growth of the markets. To lose more than 12% in 1 week is unacceptable. That is bad news. Jack Dorsey has come out trying to stop the bleeding, came out with a public statement for everybody to read. It just didn't help. Friday, it just continued down lower. It'll just be interesting to see how things play out. If you're not a follower yet, feel free to be a follower. And if you haven't clicked the link for the mentorship to have a chat with us, please do so. It's worth your while to do that. So give us a like. We'll catch up with you guys later. Bye. Just a reminder, click the link below for us to help you.